This conference will now be recorded.
Okay, thanks for reminding me. So let me go back to sharing. And so as we prepare for the quiz next week, or test next week, you should be familiar now with all four financial statements. We'll be on the statements of cash flow next week, but you should know that there are four financial statements that you're learning how to prepare. You should know that there are four organizations or entities that work to prepare the generally accepted accounting principles that govern the preparation of financial statements. Uh, the SEC, FASB, GASB, and ISB. You should know that, and then you should know backwards and forwards the 15 generally accepted accounting principles, and you should know which one relates to making adjusting entries. So you'll be quizzed on, okay, which of these principles are involved as we make adjusting entries. Okay, we're on steps 5 and 6 of the accounting cycle, making adjusting entries. And we said that the purpose of an adjusting entry was we have external entries such as if we were to buy some supplies. We bought supplies of 2,000 for cash. We bought supplies of 7,000 for cash. Those were external journal entries that we made to buy the supplies. Supplies was in an asset account. Supplies was in this asset account. But we get to the end of the year and we only have 3,000 in supplies left. So an internal entry, an adjusting entry is made typically at the end of the year to show how much of the supplies have been utilized. If we bought 9 and we have 3 left, then that means we use $6,000 in supplies. Is there anybody who can't make this adjusting entry uh, for supplies being $6,000? Is there anybody in the room who can't do that? Everybody can do that. Sounds good to me. There are 4 types of adjusting interest: prepaid expenses, and that's where we've predominantly been working. Any asset that's bought, supplies, inventory, insurance, are prepaid expenses. Eventually, they're going to turn into an expense, and we cannot leave them on the balance sheet in a permanent account. They have to go to an expense account. And so we debit the expense and we credit uh, the asset because the asset is no longer there. Then we have unearned revenues, and unearned revenues are what? Is a situation where we get income in advance before we perform the services. When we get the revenue, we're going to debit cash and credit unearned income. Unearned income is a liability account. When we perform the work, it moves from a liability account to the revenue, and we can then recognize the revenue, but we have not recognized the revenue until we perform the work. In both of these instances, and they're called deferrals, cash occurs prior to the journal entry. In earning revenue, we get the cash, or we buy the asset and we pay cash, or we create a liability and we still have to pay cash eventually. But when we make their AJE, cash is not a part of the AJE. Then we have, so cash is happening before we get we make the AJE. For the accruals, whether it's accrued revenue or accrued expenses, we make the AJE first. Then we pay the cash later. So when we're working with accruals, accrued revenue and accrued expenses, we're going to make the AJE and then we're going to pay the cash later. So that's the difference between deferrals, cash is paid initially before the AJE, and accruals, cash is paid after the AJE. And of course, the important two rules, first of all, cash is never a part of the adjusting entry itself. When you're making an adjusting entry, a AJE, no cash. Secondly, uh, when we make adjusting entries, there's always one income statement account and one balance sheet account. One account that's on the left side of that chart of accounts, balance sheet, another account on the right side, income statement. So we've looked at prepaid expenses and unearned income. We'll look at a couple more of those today. Uh, and as we said, everybody should be able to handle those two. Let's look at accrued revenue. And when we're dealing with accrued revenue, we've earned some income, but we have not received the cash. We've earned the income, but we have not received the cash. So soon, your landscaper works each week and your charge is $375 a week. So the landscaping company, the owner, has his worker come out and do the work each week. At the end of the month, when the worker has worked 304 times for $375, he records the revenue. He debit account receivable and credit sales. We said that was a type 15. And so the worker has done the work. The owner of the company does not necessarily want you to pay the worker. So he makes an entry debiting account receivable, crediting sales. He sends a bill to you. And later on, a week or so later, you pay uh, for the work that's been done. You pay the owner. And when you make that payment, you debit cash and credit account receivable. And this is the entry that the owner of the company makes. He debits cash and a credit account receivable. He likes these transactions. He does the work. He recognizes the revenue. He sends you a bill. You pay him cash later. That's fine with him. So are there any questions on accrued revenue? Well, we're going to make this AJE, then we're going to collect the cash later. This is a typical type 15, debiting a receivable and crediting revenue, and then a type 3, where we debit cash and credit account receivable. Let's move on to accrued expenses. Sometimes expenses occur and we haven't paid them yet. But when the year end comes, if there are any accrued expenses, we got to recognize. And there are two types. One is accrued interest, and the other one is accrued salaries and wages and other expenses. Uh, when we make an accrual, we're going to debit the expense and we're going to credit a payable. We're going to debit the expense and credit a payable. This is the AJE that we make at the end of the year. So let's go back and look at this situation. Assume a company creates a note for 20,000 on May 1st of 2017. So he creates the note for 20,000 on May 1st. The annual interest rate on the loan is 12%, producing an interest expense of 2,400 annually or 200 per month. And the interest is paid semi-annually on May 1st and November 1st. So when we first of all got the loan, we would have debited the cash uh, and credit notes payable for 20,000. That's a type 5. So we get the cash and we credit the note. This occurred, as you remember, on May 1st. On November 1st, we pay the interest. We pay 6 months interest from May 1st to November 1st. We make a journal entry 9. We debit interest expense and credit cash. And the amount is going to be $200 for 6 months. So we're going to debit interest expense for $1,200, and we're going to credit cash for $1,200. That's the regular entry that we make, a type 9. But when December 31st comes along, 2 more months have passed. We haven't paid the interest, but we still owe it. And so we're going to recognize this entry in 2017. We don't wait to 2018. We have to recognize the 2 months worth of interest. And so we would make an entry debiting interest expense for 400, crediting accrued interest payable. Then, having done that, debited interest expense and credited accrued interest payable for 400. When we get ready to make the journal entry, so we would have debited interest expense, credited accrued interest payable, and that would have occurred in 2017. We would have closed out the interest expense that we accrued in 2017. But the payable account is a liability, so it carries over. So when we get to 2018, we got to pay the interest. We got to pay the interest. And every 6 months, we got to pay the interest of $1,200. So we're going to pay $1,200. However, the $400 of interest that we accrued when we make that payment, that's going to be a type 8. You're paying the liability that was created at the end of 2017. The interest was incurred, accrued, you owe it, so you're reflecting the fact that when you make that payment, then you're going to debit the accrued interest payable, and you close it out then. Then you debit interest expense for 800. You're only recognizing the 800 and that 1200 as an expense in 2018. So all A and B students are expected to be able to handle that. And we'll be looking at those. The next,
Professor?
yes,
Sorry, I'm just a little bit confused on the one we just did.
okay,
How did we get 1200
okay,
and 400? I'm just a little bit confused on that one.
okay. We borrowed $20,000 on May 1st. We pay the interest on that 20,000 every 6 months. So do you see the 1200?
Sorry. Okay, I get that.
So we paid the 1200 on November 1st, 600. When December 31st, and remember we're paying 200 a month. Now, when December 31st comes around, we still we owe $400 in interest. We don't have to pay it yet, but we owe it because 2 more months have gone by, November and December. So we have to debit interest expense and credit accrued interest payable for 400. The
Okay, that makes
400
sense.
the 400 represents the interest for November plus December. You got to recognize this in 2017. Okay. So in 2017, you got to make this AJE because 2 months. Remember, you made the regular payment as you were required to on November 1st. So this is November 1st. But when December comes, 2 more months have gone by. And so you got to make this adjusting entry because this entry for these 2 months relate to 2017. Then when we get to 2018, so now we're in 2018, when we make the payment, that first payment in April of 2018, no, May, excuse me, we make it May 1st, you paying the interest from this AJE that you accrue. Remember, with accruals, you pay the interest later. So you're paying the 400 for the accrual for the prior month, then you're paying the interest, the 800. So this 400 relates to November plus December of 2017. The 800 relates to 2018. Does that help any? Well, look at it and think about it, and we'll practice on it a little bit later today. Accrued wages. Accrued wages occur when an employee works in a period but is not paid until the next period. If you work and you're employed, and if you work on December 31st, most times your employer does not pay you on December 31st unless that's the last day of the year or you're being paid daily. But in general, you pay weekly or bi-weekly. And so therefore, just like with that entry, you will work some days and won't be paid until the next year. So assume the accrued wages occur. Assume we got a weekly payroll, and assume the weekly payroll is $2,500 a week. So the workers are making $2,500 a week. And so when December 27th came around, and that was the last Friday, should have assume Friday, December 21st is the last full week. Then the company would have made this entry similar to the interest entry. They debit salary expense and credit cash. That's just a normal entry that's made. Uh, but we still have a couple of months, days left. So if you look at this calendar, when we pay on the 27th, we would have made that same entry on the 6th, on the 13th, on the 20th, and on the 27th. We would have debited the salary expense and credit cash. But when the year end comes, we still have 2 days, the 30th and the 31st. The workers work, but they're not paid. The workers work, but they're not paid. And so if they're making $2,500 a week, then that means 500 per day. So for these 2 days, the 30th and the 31st, where the workers have worked but not been paid, an adjusting entry is required. And we're going to debit salary expense for 1,000. We're going to credit wages payable for 1,000. First of all, these workers have worked and they could have generated revenue. And so you don't want to recognize the revenue and not the related expenses, because your income is going to be higher and your tax bill will be higher. So this is the AJE, debit salary expense, credit wages payable. And just like with all AJEs, they're the same. All the AJEs are the same. And so you should just lay out the AJEs. Lay out the AJEs on a sheet so you know what the AJEs are. And when you get to that one, you just pull those items out. So we're debiting salary expense and crediting wages payable. Now, when we get ready to pay the wages the next year, when we get ready to pay the wages the next year, we got these accrued wages that we put on the books. We pay the salary for 2017. And we closed out the salary expense account. We closed it out. But for the accrued wages, we're going to pay that later. Remember, we always pay accruals after, after the AJE. So when we get ready to pay the wages the first week in January, December. Okay, when we get ready to pay those wages in January, we're going to have right here the first, the second, and the third. And we're going to pay on the third. But this is 2018, and this is 2017. Now, on the third, the workers are going to want how much money? If you're working on the third, what do you plan on being paid? If you make $500 a day, how much do you want on the third? If you didn't get $2,500, you'd be jumping up and down. You want your $2,500. Now, the accrued wages of 1,000, which related to the prior year, the prior 2 days, the company is going to debit wages payable. They made the AJE and recorded the expense in the prior year. They're paying you later. They're paying you on that first Friday in the next year. So for the 1,000, that represents the Monday and Tuesday. That represents the Monday plus Tuesday that you worked in last year in 2017 that you paid for. Wednesday to Friday, you're into the new year. So Wednesday, and you're going to get $1,500 because you worked 3 days. So 2 days, Monday and Tuesday, you'd already accrued it and recognized expense to put it in 2017. And we get to 2018, we're now debiting salary expense for the 1,500, wages payable for 1,000, crediting cash for 2,500. So when as you make that payment, that's what happens. Then for every other Friday, you'll be making this entry every Friday until you get to December 31st of 2018, and you'll see what days are left over. So all we're doing, a similar type uh, thing that we do, we determine what the wages are per day. And if we need to accrue wages, if it's 2 days that were left that we're not going to be paid for until the next year, then we're going to accrue for those days, 500 and 500. Okay. Here's your summary of adjusting entries. If it's a prepaid expense, you're going to debit the expense and credit the asset of the contra account. If it's unearned revenue, you're going to debit the liability and you're going to credit revenues. There was a preceding entry. For accrued revenues and accrued expenses, for the accrued revenue, type 15, you're going to debit a receivable and credit revenue. For an accrued expense, you're going to debit an expense and credit the liability. And then there will be a subsequent entry where you will make the payment. And I put this chart of accounts in there for you, which sort of shows you the journal, the entries you got to work with. Are there any questions by anyone at this point? Are there any questions by anyone at this point?
I had a question for number 26. I think it's with the what is it called? The it says to record the subsequent journal upon receipt of the cash from Chase Bank. What would
Mm-hmm.
you do for that?
Record the
I know
receipt.
I read the first part.
Record the receipt of the cash. Well, let's go to 26 then. So this your Skurlock?
Yeah.
Okay, so it says J Rental Company in December 20th, 2017 provided 20 limousines to Chase Bank executives at a rate of $400 per vehicle for a special holiday outing. Okay, so Chase Bank is renting 20 limousines from your company. You are running a limousine company, and the executives come in on the 20th and get 20 limousines at $400. So what entry you gonna make to get those limousines? When you give them
Uh,
the limousine, what entry might you make?
purchasing an asset, type 7, or no?
You didn't purchase anything. You okay? You already got the vehicles bought and you rented them out. So we aren't talking about purchasing anything. You
Yeah.
already have the vehicles and you rented them out.
Oh, so unearned income?
Well, you gave them the vehicle, so it's not earned. It's earned when you have what? 24, 25, where you got the cash in advance. You don't have the cash. So you're not in AJE 1 or 2 territory. You're in the AJE 3.
That's why I'm confused at.
Okay. Our rental car company provides limousines. Okay, so that's part of what we do too. And so Chase Bank says we want 20 limousines for $400 a piece. The execs from Chase come and get the limousine. So what has happened? Can you make a Type 15 journal entry for that? So if you were making a Type 15 journal entry, you would debit what?
Accounts receivable.
So we're gonna debit account receivable. What you gonna credit?
Sales.
So you don't have any cash yet, but you've done the work. You know, Chase is good. So sound like a good transaction. 400 for 20 limousines. How much money have you made?
8,000.
Okay, so Chase owes you $8,000. Make this journal entry, and Chase sends you. You make this journal entry, and you send a bill to Chase for $8,000. Then Chase sends you a check. Chase sends you a check for $8,000. What's your journal entry type now when Chase sends you the check for $8,000?
Type 3.
That's type 3. What you gonna debit?
Cash.
Okay, so you're gonna debit cash.
Okay.
What you gonna credit?
Accounts receivable.
Credit account receivable. So that's all involved. You've done this many times before, just taking on a little different format in terms of the entry.
Right.
So you got it now?
Okay. So what receipt part? Receipt of the cash. That's what we've done already. Oh, okay. That's the type 3.
That's the type 3 receipt of the cash.
Okay. Got it.
Got
Okay.
it
Thank
now?
you.
You're welcome.
Mhm.
So once again, it's written this way, but that's all involved. Any question on that? So we've looked at an accrual. We accrue the revenue of type 3. So we debit the receivable and credit sales. So this is AJE type 3, journal entry type 15. Then we get the cash, we debit cash and credit account receivable. So on the accruals, there's nothing really hard about it. And so this first entry, okay, this is the AJE here. So here is the AJE. Here is the subsequent entry to collect the cash. So you've been doing this since almost day one. Any question? Can everybody handle an accrual of revenue? Can everybody handle a type 15 and a type 3? Is there anybody who can handle a type 15 and a type 3? Well, go ahead and work 20. Who has 27? Well, y'all go ahead and work 27. Take 2 minutes and work 27. Everybody take 2 minutes and work 27. Y'all got it work?
You're learning how to do it right now.
Dr. Boyd, my name is Nora. I had number 27, but I'm with Brooke right now in the room learning how to do it.
Are you with Brooke learning how to do it? Have you learned? And after all this talking I've done about it and my throat sore from doing it, did you learn
We
anything?
doing it right now, Professor.
I'm going to put my A students to work. Martha, how we coming, Burris?
I'm working it.
Okay. We're going to begin to meet in the classroom next week. And so what I want to do is to get a time to meet with you separately, because I know I told you to stay in. So think about a time that we can meet separately, okay? Unless you
Yes,
can
sir.
come to campus.
Yes, sir. Thank you.
Okay, so think about it and give me a time at the end of the class.
Okay.
Y'all got it work? All y'all had to do was to come here and change these numbers. So I don't know what y'all are doing. So the AJ, these interest data say, how much is it? How much is it? And y'all try
2,000.
2,000. That's all you had to do was to come in here and put 2,000 in. So you all are trying to make it hard. Call this hard material. And all you had to do was to put the $2,000 in, and you done. So we have done 15 and threes and forever. So a key thing to remember with the AJEs and related entries, they don't change. You just got to change the dollar amount. So Brooke, how was your instruction? Brooke, how did your instructee do?
Great. We're great over here.
Y'all great over here?
Yes, we're getting it together.
So how well did she get this one together now? How many points does she deserve?
Give it a point. Yes. They showed up to tutoring. They deserve some points.
Well, we'll give her a 9 since she showed up for tutoring.
Yay.
Yeah, so we have to give special points for the people who go in there and show up for tutoring from Brooke, who's doing it for free, not even being paid. Look at that dedication. Okay, let's see if we can work on let me just see what layout. Let's see. Brandon Johnson. Brandon, are you here?
Yes, sir, I'm here.
All right, so let's work your AJE. Which one is it?
33.
Okay. So Brandon, I want you to perform like an A student that you are and just knock this out. Tell
Okay.
us about it and what you're doing.
All right. So for 33, uh, I think it was unearned revenue because they had got the cash and credit as a liability. So for April 1st, 2017, for cash, I debited 80,000 and credited notes payable 80,000.
So what journal entry type is that?
Uh, It's type 5?
It's type 5. So that wasn't any unearned revenue. They borrowed some money. So you debited cash and credited notes payable for $80,000.
Correct.
Okay. Then what happened?
And then for October 2017, the interest expense got debited 4,800 because
How'd
it
you
was
get 4,800?
I divided the 9,600 for the, let me see, the annual interest divided by 12. I think it came out to 800, I want to say.
So the interest is $800 a month. So when we get down there to make that payment on
Yeah, I
September,
multiplied it by 6 because of 6 month
multiplied
interest.
it by 6. So how much should that be?
4,800.
Okay. So that would have been an entry debiting interest expense and crediting crediting cash of
Cash.
4,800. Okay, so what do we need to do on December 31st?
Make a adjusted journal entry, debit and interest expense for 1,600.
Crediting what?
Accrued interest payable for 1,600.
Okay. How'd you get 1,600?
That was the 2 months between October and December, so that was 800 times 2.
So you had 33, right?
Yes, sir.
So April, they made this loan. Then on October 1st, they paid the interest. We said it was 800 a month, so it's 4,800. So they would have debit interest expense and credit the cash. How many months from October to December?
2, November and December.
You got to count October too.
Oh, I do? Okay.
Yep.
So 3.
So that's 3 months.
So it'll be
So how much
2,400.
would that interest be at 800 a month?
2,400.
So this should be 2,400. So just always remember, if something happens on the first of the month, you got to count that month too. Now, what happens when we get to 2018 and we pay the interest?
The interest from 2017 carried over. So accrued interest payable for 2018, that was the 4 months. So that equaled 3,200. And you debit that.
Wait a minute. Let's make it 3 months. Remember, this was 3 months, so you got to debit the liability for 3 months because you got to pay that.
Mm-hmm.
When we get to April 1st, January, February, March, that's just another what? 3 months.
Okay.
So the interest expense is simply the 3 months, January, March. Then you're accruing those months from the last period, which was October to December. Whenever it says October 1st, you got to count that month. Okay.
Okay.
So
I think I had
October.
counted April 1st for 2018. That's where I messed up at.
So you paying out interest of what?
2,400. And then crediting the cash for 4,800.
That's correct. So you still got to pay the $4,800. Then when you got to October 1st, you just debit interest expense and credit cash for $4,800. Then when you get to the end of 2018, you got to make this entry again. You have to make this entry again. So he did pretty good for a hard one, kind of. But the key thing, Brandon, is that this is a type 3 AJE, Roman numeral 3, excuse me, Roman numeral 4. This is an accrued expense.
Okay, got it.
This is Roman numeral 4, an accrued expense. Okay. Any question by anybody? Any A students and B students? Do all the A students and B students know how to make that entry?
No.
Say what?
No.
How you don't know how to make that entry, Christine?
You know what? I'm so over this right now. I'm frustrated. But it's okay. I'm going to figure it out.
Yeah, well, remember, there's levels of thinking in terms of what we're doing. Accounting at the end of the day, and business and work in general, is thinking. Rote things are done by the computer, so you've got to learn how to think. You cannot just say, my education, I'm getting educated. If I can memorize something and throw it back, that's not education. That's a part of it, but eventually we want to do critical thinking, and you won't learn how to do critical thinking unless you practice it. So that's why we're here. At the end of the day, the difference between a high school graduate and a college graduate is that a high school graduate can think. A high school graduate, college grad can think and make decisions. Doesn't have to go straight on memory. Okay, so let's move on to, and we're going to review these again on Monday in the classroom. So let's move on to an accrued salary. And we're sort of using the same calendar. We're using the same calendar where the workers are paid on a Friday. Okay. They're paid on a Friday. And when they're paid that way, there always are going to be some days left over that you got to accrue in 2017. So you're going to recognize paying the workers from the 1st through the 27th. Then you make an AJE because you got to recognize these 2 days also, the 30th and the 31st. So the 30th and the 31st are the AJE. That's where the AJE comes from. These days that you work, the workers work, but have not been paid. Okay. Let's look at what the journal entries are going to be. We're going to debit salary expense and credit cash when we make the first payment. Then we're going to make the AJE, debiting salary expense and crediting salaries payable. And then when we get the next year, we go debit salaries payable, salary expense, and credit cash. Let me just put some space.
Something like that.
Professor, I have that question.
Which one you got?
I have 36.
Okay, well, tell us about 36 then.
Okay, so for December 27th, I debited
Tell
5,000
them
for
first. You got
salary.
to tell them what's going on first.
Oh, okay, sorry. So it says J Rental Car Company pays its employees weekly 5,000 for a 5-day work week on Friday.
Utilizing the calendar listed above, record payment of regular payroll on December 27th, adjusting entries required on December 31st, and subsequent entries upon payment of salaries on January 3rd, 2018.
And that's a good one for an up and coming A student, B plus student, moving to be an A student. So
So I
when they pay the salary, what's the journal entry?
sorry, 1 second. Okay, what'd you say, Professor?
Okay, we're paying the workers for working the week of the 22nd through the 28th. We're paying them on the 27th. How much we gonna pay them?
$5,000. They're getting paid 1,000 a day.
What's our journal entry time?
Um, is it 9?
It's a 9. So that's a type 9 that we're making to pay the regular payroll. Then what's gonna happen on December 31st?
That we're gonna pay them 2,000 for those 2 days of the 30th and the 31st, and then
Are they gonna be paid on the 30th and 31st? Do you work?
yeah, yeah, because it's a Monday and a Tuesday.
Do you work?
Do I work?
Mm-hmm. Just
Yes.
check. Say what?
Yes, I do.
And you get paid on December 31st. If you were working where you're working now and you're being paid every week,
Oh
and
no, it would only be it would be Friday.
it'd be Friday, okay. So what journal entry you gonna make now for those 2 days?
Um, I put for the 31st. I put salary expenses. I debited 2,000, and then I credited salaries payable for 2,000.
So that's your AJE. For those 2 days, you're gonna make this adjusting entry. You're gonna make this adjusting entry to debit salaries expense and credit salaries payable. You're gonna make that entry. The work is like I say, you would have worked, but you would not be paid. Now, when January 3rd comes in 2018, how much money you want?
Can you repeat that?
When we get to Friday, that first
Mm-hmm.
pay period in 2018, how much money do the workers want?
5,000.
Oh, so you want $5,000. So on that Friday, 5,000 is going to be paid. We're paying that accrued amount 2,000 what? From the prior year.
Y'all still on the same?
Then we're paying 3,000. So this is Monday and Tuesday that we accrued in the AJE. Then the difference is what? Wednesday, Thursday, and Friday.
Mm-hmm.
Any questions?
No, sir.
Oh, you got it down? So you can make this now,
Yes.
right?
Yes, that's what I had. I had that to begin with.
Oh, you had that to begin with.
Yes.
Who has 38? Who has 38? Well, everybody work on 38 then. Everybody work on 38. We have a 10-day work week, so work on 38.
Professor,
Yes.
on the fifth, for the adjusting journal entries, will all 40 of them be due, or just the ones that we were assigned?
All 43 will be due. Why should you? I've given you credit already for doing the one. So all of them will be due. Just in case I had a quiz, and since we're in class, I have a paper clip quiz, and I may select some off of here and just give you ones that you would have done the homework on, so you get a great grade on it. You did your homework, so I could just select some of these that you already worked on and tell you to make the adjusting entries. Wouldn't that be great? So we're on 42, correct? Or 43? Which one we working?
I think you said to do 38.
Oh, did I say 38? Okay. Thank you. You got it work, Green?
I'm working on it. I was trying to do mine, which is 40 before the class was over.
We'll probably do that one on Tuesday. Okay, so what do we know about 38? They paid every 2 weeks, right? Do we know that?
Yes, because it's every 10 days. It's a 10-day work day.
Well, go ahead, Green. Since you're talking, go ahead and take the lead on this.
Okay, so let me see. Let me try. I did debit 5,000 on the biweekly salary expense, and then 5,000 on the biweekly cash credit, and then
Okay, so if you were bi-weekly, you're gonna make the same entry: debit cash 5,000. Debit salary expense for 5,000 and credit cash.
mhm.
Then what you gonna do?
For December 31st, it looked like they was getting paid 500 a day. So I did it 1,000, debit 1,000 for salary expense,
That's correct.
and then 1,000, I credit 1,000 for salaries payable,
All right. Then what?
and then 1,000, I credit 1,000. I mean, I debit 1,000 for salaries payable, and debit 4,000 for salary expense. and then credit 5,000 cash.
That's all it is. So you can see that the journal entry accounts don't change. You got to do a calculation. You got to do a calculation. Okay.
I'm confused where the 1,000 came from.
Tell her where the 1,000 came from.
Because on a 10-day work week for biweekly, if you're getting 5,000, like for 10 days, you're basically getting 500 a day. So from if payday was on the 27th, and then you paid like your amount is added up to the 31st, is $1,000 because that's only 2 days.
So that's why I put them here together. When it was weekly, it was 1,000 a day. So the 2 days was 2,000. But if it's bi-weekly, then it's 500 a day. And so it becomes 1,000. So that was great thinking, Ms. Green. We'll make sure you get an A test on this.
I'm gonna get points for this too.
Yeah, put points down. You didn't see?
Oh no, I didn't see.
Oh, okay. Are there any questions? So we have worked every type. We've worked every type. On Tuesday, we will review each type. On Tuesday, you all will review each type. You will work each type. So we'll go through it. People who hadn't presented will have a chance to present. But we're going to work every type, get some strategy together. So on next Thursday, a week from today, you'll be able to knock out these adjusting journal entries and be an adjusting journal entry expert.
Professor Boyd, can you give us some extra time on the assignments that are due, which is this one and then the really long one?
What long
Because
one?
like the what's the other one that you gave us? It's the midterm one, financial transactions that you assigned, because they
I
say
don't
that
know.
they're
People were worried me about they wanted their midterm grades, Callahan.
hmm,
They said they wanted to get this done so they could get their midterm grades.
okay.
All right. We'll move the midterm problem back to next Thursday. Okay. So the only thing due on Tuesday will be the adjusting journal entries. Does that help?
Yes.
So this Tuesday, all of the 40 adjusting is due.
Yeah, 42 or 43 manner.
Okay.
You've seen all the types. Now you're going to work on them and get them all done. And what we're trying to do is to over prepare. So they're hard, they're different, So we, have you work on all of them, and then how many of them you want on a quiz? How many do you think you can handle on a quiz?
One of each.
One of each. So if it's one of each, how many would that be?
I think 9, 10,
All
9.
right, so all the A students, Callahan said all the A students need 10.
I did not say that. I'm trying to count and talk.
So the B students, you all be at 7, and the C students at 5. So we aim to please.
Do you want T accounts too, or just the adjusting entries? No T accounts. Don't say you do.
Well, we leave that up to the individual. See, sometimes you'll have people who want the T accounts. You know, you'd be surprised. So I'm just gonna grade the journal entry. Maybe I'll get Brooke to grade them. Brooke, you gonna grade them for me? 'Cause I wore myself out
What
grading
you
them.
need me to grade?
So Brooke, you gonna grade them for me?
What you want me to grade?
The adjusting journal entry quiz.
Yeah, I'll grade your quizzes.
Good. Because I got their study problems to do. So we'll see.
Y'all better get A's.
But I'll be look. You know, the one thing, you know, there's a lot of grading, but I learn a lot more. You know, I sent some of you all emails as I was grading. So okay, so adjusting entries are difficult. You know, now when you work a problem out of 100 journal entries, only 10 may be adjusting entries. Okay, so like on your problems that you're doing, your midterm problems, you only got 2 or 3 adjusting entries, so keep them in perspective. The A students might have 10. So there's only ever just a few that you're dealing with each year. The regular entries keep repeating. The adjusting entries are only at the end of the period. The internal transaction, you got to think and everything. We've put a little more time on it. And so we're going to see how I've done and how Brooks tutoring is done. And will you all be the first class where most students pass the adjusting journal entry quiz? Is that going to be the case where over half pass? Only Brooke passed in her class and 1 or 2 others. See, you all are different. And, you know, I changed it up in terms of, you know, so when I don't have the results I want, then I change it up. So that's why everybody's doing one, then you turn it in all 43. There's a reason. I want more people to pass the quiz. Got it? And if that happens, I'll work with that way from now on. If it does not happen, I'll try something else. Any question? Burris, did you come up with a time? Does 1:30 work on Tuesdays and Thursdays?
Yes, that'll be fine.
Okay. So what that means is this, you know, I'll be on campus. I will probably use the go-to meeting and start at 1:30. See, I'm just so diligent and dedicated. And then I'll work 1:30 to 2:30 on this format and tape it. Then I'll go to the classroom at 2:30. Then I'll go through and repeat. So some people who need to hear things more than once, so you got a chance to hear it more than once. I'm going over it uh, 1:30 to 2:30 uh, virtually and taping it. Then I'm repeating the same thing in the classroom when I get to the classroom at 2:30 to 3:45. So you can hear it twice. Now when it gets time to take that quiz, the only Burr is doing it virtually. The rest of y'all got to be in the classroom. Got it? Good.
And the quiz is on next Thursday, right?
Next Thursday,
Okay.
an A quiz for Green, an A quiz for Callahan, A quiz for Pinto, A quiz for Thomas. Everybody get an A quiz.
When are your office hours again, Professor Boyd?
Okay, at 5 o'clock on Mondays and Wednesdays. I do the office hours. So some people were in office hours yesterday. So at 5 o'clock, I do the virtual office hours, 5 to 6 on Mondays and Wednesdays.
Thank you.
You're welcome. So you got 5 to 6 on Monday and Wednesday office hours. Then you got some free time, free hours at 1:30 to 2:30 in this format. Then you got the classroom at 2:30. So I'm going all out as we finish up. So all of you all will finish successfully. And most people will have a B grade or higher. That's the goal. That's my goal. You just got to put the time in, but not call Brooke at 10, 11 o'clock at night. So you got you got the 5 o'clock time, you got the 1:30 time. You got plenty of time to get your questions answered. Anything else? Let me run because I got some folks who are jumping at the bits to get their
Are you
class
back
going.
receiving emails?
So what now?
Are you back receiving emails?
Yeah, I may be. I don't know. They're trying to clear them out. That is, some came, but then it just kicks them out whenever it gets ready. But I've lost all the emails. I hadn't looked at it today, but I got some for a couple of days. But any emails over 2 days old, I don't have them. So you don't
Okay.
always come to class and talk to me too.
Okay.
I don't like reading emails anyway. So I was happy it wasn't working.
Okay.
Professor,
Did
Yes.
you check your
I
email?
No, I
I
didn't
was trying
check
to
my
look
email.
for
Wasn't working.
Hmm?
Ida, what Ida?
I was trying to look for the tutoring thing, but I just couldn't find
I
this link.
probably
I'm
did. I
sorry,
tape it.
the tape.
I'm not sure if I taped the tutoring. I'll check and see. But remind me to tape the tutoring, okay? Remind me to do that. I'm not sure if I taped it. Remind me to tape it. If I did tape it, I'll pull it up and I'll post it.
All right.
That pretty young lady by Skurlock
Professor.
must have a handsome daddy. That's all I can say. Must have a handsome daddy.
Professor.
Yes.
So the adjusting study problems is due on the 7th?
Yeah, you need that.
Adjusting.
Right. You should have that done on the 7th.
Okay.
Is that? Wait a minute now.
Or is it the midterm study problems on the 7th?
Okay. That's the midterm study problem. The adjusting entry is due on the 5th
Okay.
because we're reviewing in preparation for quiz. And what I'll probably do, I'll probably move it back to Friday for the midterm study problem. So I'll move it back to Friday midnight. Okay.
Okay.
Anything else? All
Did you just
right.
check
Well,
your email? That's all.
what?
I emailed you, that's all. But
You
I'll try
emailed me.
again. Yes.
I'll look at it and see, Skurlock.
Okay. Thank
All
you.
right. We'll talk to y'all later. Bye.